How can I avoid double taxation on my retirement income in Thailand?
Okay, so with the double taxation rules, if the jurisdiction where the pension is from, so the location of the pension, if that country has a double taxation agreement with Thailand and you transfer that money into Thailand, we look at what the double taxation agreement states. A lot of the time, you can use the tax paid in another jurisdiction as a tax credit against the tax paid in Thailand. So that's how we would use the double taxation agreement. There are some countries like the US where that's not the case. For pensions, like 401ks, the double taxation agreement shows that the assets are taxable in Thailand, but not in the US. So it depends on the double taxation agreement for where the assets are, the pensions, and Thailand with the double taxation agreement. So it's not as clear as we always claim it. It depends. So that's where we're here to help. If people would like information on their specific pensions and the location, we have many webinars for different nationalities and jurisdictions. And if still they don't have the information, they can reach out to us and we will help them understand the rules.
Before I heard, but it's from Russia. They want to apply tax for the property people have in Thailand. They can do it by double tax regulations.
Yeah.
Am I right?
Yeah. So it depends. So if there's a Russian that's living in Thailand and Russia has a rule that applies that even for non-residents, they can be taxed on the asset, then yeah, they can potentially tax. If they change their revenue code, if Russia changes the revenue code and the double taxation agreement shows that this is allowed, they will make it so that it is, then potentially, yes, they could be taxed depending on how Russia wants to change their own revenue code. It depends on how this would be put in the legislation in Russia for overseas properties or overseas assets.
We are in another country and then they want to put tax on our property here.
Yeah, right. Well, some nationalities like US nationals or US green card holders, regardless if they live in the US or not, they have to file a tax return in the US for their worldwide income and worldwide assets. So there are other countries that have this worldwide taxation, even if they're not living or remaining in that country. So it could happen, but it depends if Russia has a lot of kickback from people, and whether they'll be able to get that through and approved in the revenue code. But there are other countries that already do this. So potentially, yes. The problem what we've got, Ella, is a lot of countries, they need to increase their tax revenue. And people that are living overseas, it's an easy tax grab because they're not necessarily voting in Russia, for example, just as an example. So if they need to increase their tax base and their tax revenue, it might be an easier target rather than changing and increasing domestic tax rules where the voters would probably not be happy with the changes. It might be easier to change the rules for people that are living overseas that are not voting, or they potentially have a higher income overseas than in Russia, and they can increase their tax base without decreasing vote.